tax season. For most people, it's just a few forms and a refund check. But for gig workers, it's a different game entirely. If you drive for Uber, deliver for DoorDash, or freelance online, you're not an employee, you're self-employed. That means no one is withholding taxes for you. No employer is covering half your Social Security. And the IRS expects you to pay throughout the year, not just once in April. Here's the good news. Being self-employed also means you can deduct business expenses that W-2 employees can't. And with new tax laws for 2025 through 2028, there are even more ways to save. In this video, I'm going to show you the 3 biggest deductions most gig workers miss, how to calculate and pay quarterly taxes so you avoid penalties, common mistakes that cost you money. Let's get into it. First, let's understand your tax status. If you work for Uber, DoorDash, Fiverr, or any gig platform, you're considered an independent contractor. You'll receive a 1099-Z or 1099-K form if you earn over a certain amount. As a self-employed individual, you report your income and expenses on Schedule C, profit or loss from business, with your Form 1040. Here's what that means for you. You pay self-employment tax, which covers Social Security and Medicare. For 2025, the combined rate is 15.3% to 12.4% for Social Security on the first $176,100 of your net earnings, and 2.9% for Medicare with no income limit. You can deduct business expenses, which lowers your taxable income and reduces what you owe. You need to pay quarterly estimated taxes, because no one is withholding taxes from your paycheck. If your net earnings exceed $400 for the year, you're required to pay self-employment tax, regardless of your age or whether you receive Social Security benefits. Now let's talk about the deductions that can save you hundreds, or even thousands, of dollars. Deduction number 1, and the biggest one for drivers, is mileage. If you use your car for gig work, you can deduct the business miles you drive. For the 2025 tax year, the IRS standard mileage rate is 70 cents per mile. Let me show you what that means with real numbers. If you drive 10,000 qualifying miles in a year, you can deduct $7,000 from your business income. That's $7,000 you don't pay taxes on. But here's where most drivers miss out. They don't track their miles consistently. What counts as business miles? Driving to pick up a passenger or delivery. Driving during a trip. Driving between trips while you're on the clock. What does not count? Commuting from home to your first pickup. If you start from home, this is gray, check with a tax pro. Personal errands. How to track mileage. Use a free app like Stride or Everlance. They automatically track your trips using GPS. You can also keep a paper logbook, but apps are way easier. Pro tip, you can only deduct mileage or actual car expenses, gas, maintenance, insurance, repairs, not both. The mileage method is almost always better for gig workers because it's simpler and often gives a larger deduction. If you drove 15,000 business miles in 2025, that's a $10,500 deduction. Don't leave that on the table. Deduction number 2, the home office and your phone and internet bills. If you work from home, even part-time, you may be able to deduct a portion of your rent, utilities, and maintenance costs. The home office deduction, you can deduct expenses for the part of your home used exclusively and regularly for business. That means a dedicated space, not your kitchen table where you also eat dinner. You have 2 options. 1. The simplified method, deduct $5 per square foot of your home office, up to 300 square feet, max $1,500. 2. The regular method, calculate the actual percentage of your home used for business. For most gig workers, the simplified method is easier and safer. Phone and internet, you can deduct the business percentage of your phone and internet bills. If you use your phone 50% for work, deduct 50% of your monthly bill. Same for internet. Real example. Rent, $1,200 per month. 10% home office equals $120 per month. $1,440 per year deduction. Phone, $80 per month. 50% business use equals $40 per month. $480 per year deduction. Internet, $70 per month. 50% business use equals $35 per month. $420 per year deduction. Total from this category, over $2,300, just for working from home. Deduction number 3, supplies, tools, and health insurance. This is where freelancers and delivery drivers often miss out. Supplies and equipment, anything you buy for your business is deductible. This includes laptops, tablets, and phones. Software subscriptions, Adobe, Canva, QuickBooks. Platform fees, Upwork, Fiverr commissions. Car washes, phone mounts, charging cables. Parking and tolls during work. Health insurance premiums, if you're self-employed and pay for your own health insurance, you can deduct your premiums. This is a huge one that many gig workers don't know about. Retirement contributions, if you contribute to a SEP IRA, solo 401k, or traditional IRA, those contributions are also deductible. Real example. Laptop, $1,000, deduct full amount if used 100% for business. Software subscriptions, $50 per month, $600 per year. Health insurance, $400 per month, $4,800 per year. That's over $6,000 in deductions, on top of mileage and home office. Here's something brand new for 2025. Under the One Big, Beautiful bill signed into law on July 4, 2025, gig workers can now deduct up to $25,000 in qualified tips from their taxable income each year from 2025 through 2028. This applies to both single filers and married couples filing jointly. For self-employed workers, the deduction can't exceed your net income from the business where you receive the tips. If you're a driver, delivery person, or freelancer who regularly receives tips, this could save you thousands. Pro tip, keep a record of your tips, even small ones add up. This deduction is new, so make sure you take advantage of it. Now let's talk about quarterly estimated taxes, because this is where most gig workers get into trouble. Since no one is withholding taxes from your gig income, the IRS expects you to pay throughout the year. These payments are due 4 times a year, April 15th, June 15th, September 15th, and January 15th of the following year. If you expect to owe $1,000 or more in taxes for the year, you're required to make quarterly payments. How much should you save? Tax experts recommend setting aside 25 to 30% of your earnings for taxes. Here's a simple example. You earn $40,000 in gig income. Self-employment tax, 15.3%, equals $6,120. Income tax, depending on your bracket, equals $2,000, $4,000. Total tax bill equals $8,000, $10,000. That's 20 to 25% of your income. Use the IRS Form 1040-ES to calculate your estimated payments. Pro tip. Open a separate savings account just for taxes. Every time you get paid, transfer 25 to 30%. Before we wrap up, let's go over the most common mistakes gig workers make, so you can avoid them. Mistake number 1, not tracking income accurately. If you receive multiple 1099 forms, make sure you report all your income, even from platforms that don't send a form. Mistake number 2, misclassifying business expenses. Not everything is deductible. Personal expenses, like your morning coffee or groceries, don't count. Keep personal and business expenses separate. Mistake number 3, forgetting to pay self-employment tax. This is separate from income tax. Many gig workers forget about it and end up with a surprise bill. Mistake number 4, not setting aside enough money. If you spend all your earnings, you won't have money for taxes. Save 25 to 30% from every payment. Mistake number 5, missing quarterly estimated tax deadlines. Late payments can result in penalties. Mark those 4 dates on your calendar. Mistake number 6, skipping legitimate expense claims. Many freelancers fail to deduct business expenses like laptops, internet, co-working spaces, and software subscriptions, reducing their taxable income unnecessarily. Let's see what a gig worker could save with these deductions. Realistic example, a full-time Uber driver earning $50,000. Mileage, 20,000 miles times 70 cents equals $14,000, deduction. Home office, 10% of $1,200 rent times 12 equals $1,440 deduction. Phone and internet, 50% of $150 per month times 12 equals $900 deduction. Health insurance, $400 per month times 12 equals $800 deduction. Supplies and tools, $1,000 deduction. Tip deduction, up to $25,000, if applicable. Total deductions, over $22,000, potentially much more with tips. That means instead of paying taxes on $50,000, you pay taxes on roughly $28,000 or even less. That could save you $5,000 to $7,000 in taxes. That's real money. Money you worked for. Money you get to keep. Here's your action plan for today. 1. Download a mileage tracking app, Stride or Everlance, and start tracking every business mile. 2. Calculate your home office percentage, measure your workspace and figure out what percentage of your home it is. 3. Open a separate savings account and start setting aside 25 to 30% of every gig payment for taxes. Mark your quarterly tax deadlines, April 15th, June 15th, September 15th, and January 15th. 5. Keep receipts for everything. Phone bills, internet, supplies, health insurance. Do these 5 things, and you'll save hundreds, maybe thousands, on your taxes this year. If this helped, hit that like button. It tells YouTube to show this to more gig workers who need it. Subscribe for more practical finance tips for freelancers, drivers, and anyone with irregular income. Thanks for watching. Now go save on your taxes.